Hello and welcome to this Tuesday's morning market briefing. Got lots to talk about, but firstly, oil prices could hit $150 a barrel. The World Bank does predict and warn the world, as well as that Israel's forces push deeper into Gaza as escalations and tensions mount. Got lots to talk about on the charts also. With lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around to see that. Before we get straight into it, make sure to subscribe. And yes, the first article to talk about, of course, is oil prices in relation to Israeli conflict. Now, crude prices could rise to more than $150 a barrel if the conflict in the Middle East escalates. And this information comes during the World Bank's warning on Monday, where risk of a repeat of the 1970s oil price shock was highlighted if key producers cut supplies. And this would be, a similar situation, to be honest, to the one that we did see in 1970s, with escalations within the Middle East cutting that oil supply, which is so very needed for the world's, oil demand to be met, and as a result, if that supply is cut, likely through Saudi Arabia, who obviously drives a great deal of the world's oil production, if that supply is cut through conflict, then the ramifications price-wise across the world are immense, and this is compounding on top of the effects that we're still feeling from Russia's invasion into Ukraine, which obviously had great detrimental impacts on the world oil supply. So this is really the key worry and issue at the moment, which the World Bank is highlighting. Now, the multilateral lender said a prolonged Israeli-Hamas conflict could drive big rises in energy and food prices in a dual shock for commodity markets, still reeling back from Russia's full-scale invasion into Ukraine. And once again, there it's mentioned is this double whammy that we would be feeling from the still felt ramifications of Russia's invasion into Ukraine, which obviously had its humanitarian impacts, but has also massively influenced inflation across the world as a result of the rise in oil prices following the supply cuts following the invasion. Now, whilst the bank does predict falling commodity and oil prices, the outlook could quickly reverse if the conflict in the Middle East does intensify, with the worst case scenario seeing global oil supply shrinking by 6 million to 8 million barrels a day, sending prices to between $140 a barrel and $157 a barrel. So that's significantly high prices, which obviously would have so many ramifications on inflation, which is already very high. I mean, if we're just looking at the UK's inflation, that's within the 6% categories. And today we did have the inflation data come out from Germany that did show that inflation was still at a high level of 3.8%, and so the ramifications of these oil supply shocks could be great. Now, the worst under small and medium disruption scenarios, prices could hit $102 a barrel to $121 a barrel. But this is all obviously following Hamas's massacre of 1,400 Israelis and the following Israeli bombardment in response, which has reportedly taken 8,000 lives within Gaza, and the possibility of the conflict spreading outside of Israel, the effect on the oil supply is massively risked as a result of these escalations, which are increasingly becoming likely, especially on the Lebanon border, where Hezbollah is based, along with the Syrian border. And obviously we understand that there's great protests and rallies in support of not only Palestine, but also Hamas terrorists within Gaza, in many of these other Arab nations. And obviously recently we've also seen those escalations occur within Dagestan, where they did certain groups within Dagestan did end up breaching into the airport and searching for Jewish individuals as well as Israeli individuals following the plane landing from Israel. Now, crude prices last hit the record of $147 a barrel in 2008 on the eve of the global financial crisis. That said, the World Bank does say that the global economy is in a better position to respond to a supply shock than ever before, due to the Middle East being less important for the global supply of oil. As obviously, if they're supplying less as a percentage of the world, there is less of a chance that it will have a great effect on the world. But as the article does highlight, $150 a barrel would be very, very high and very, very significant. Now, a persistent drive higher in commodity prices could also have severe consequences for food security in poorer countries already facing rising levels of hunger. And we especially saw that, of course, in Africa following Russia's invasion into Ukraine, where the grain exports and the rising prices of other commodities had great effects on the populations to consume food, as food production was halted, as much of the grain for food production was coming from Ukraine. Now, next to talk about, though, is staying on the topic of Israel, but this time in relation to their offensive into Gaza. Now, Israeli ground forces pushed deeper into the Gaza Strip, rescuing a hostage in the process. Now, this comes as the war threatens to escalate to multiple fronts, and this is something that we've been talking about a lot recently, especially in relation to the risks of escalation on these multi-front axes that we've definitely highlighted, especially in relation to Lebanon and Syria, as I've mentioned. But also, we've had worries with the Houthis in Yemen, which fired rockets, which were then intercepted by the US, and as well as, other rhetoric that has come from certain groups within Egypt, Jordan, and Syria, as well as Iraq, and as well, the puppet master of them all being, Iran, which has a massive paramilitary network, which is kind of pushing for this regional escalation, it does seem, with additional infantry, armour, engineers and artillery deployed into Gaza on Monday. And this is obviously as the offensive into Gaza does continue to expand, with reportedly, the killing of dozens of Hamas militants already and reaching the Gaza city outskirts, with a recent video emerging showing an Israeli tank on the outskirts of Gaza. More news is coming out around, the Israeli hostages following the 4 that were released last week, with a video released by Hamas showing 3 hostages begging for exchanges. Now, this has been a common tactic used by Hamas, and the current tactic that they do seem to be employing is a move to use these hostages as bargaining chips for a prisoner exchange from Israeli prisons, which are holding more Hamas terrorists and other Palestinian militant group fighters, and they are trying to get those fighters released in exchange for the hostages, which are obviously taken from civilians' homes, and many of those being women and children. Now Olaf Scholz, Germany's chancellor, in response to the confirmed death now of the 22-year-old German-Israeli woman abducted by Hamas. In response to that, he did say Israel has the right to defend itself. And this is what we've been hearing from many of these Western nations in response to the events taking place within Gaza and Israel. Now, footage online does show, as I mentioned, an Israeli tank and bulldozer on the outskirts of Gaza City. So it does seem that IDF is nearing closer and closer to encircling the Gaza City, where obviously a massive ground offensive into the urban area will occur. Now, footage online with the IDF saying 600 targets have already been hit in recent days. But at the same time, Israel has also severely limited supplies of electricity, water, fuel and food to the enclave, prompting aid agencies to warn of a growing humanitarian catastrophe, with Israel's kind of justification being that they don't want these supplies going to the Hamas terrorists, which are, building their defenses and, embedding themselves within tunnels and other military infrastructure within Gaza City. Now, the Israeli Air Force bombed military infrastructure in Syria overnight following rocket attacks, another sign that, of the risks and possibilities of further escalations, with Daniel Hagari, the IDF spokesperson, saying Israel was prepared for a flare-up in hostilities on its northern border with Lebanon, where Hezbollah is of course based, when we know they have at least 50,000 fighters prepared with many rockets, further ranges on those rockets in comparison to the Hamas terrorists, and many fighters well trained and ready to go at war with Israel. But that's all to talk about on the articles really. Next to talk about, of course, though, is the charts, where we have lots happening. But firstly to talk about is US indices. Now, US indices, obviously, going into this week, had broken below this area of liquidity, which we had highlighted, and had pushed significantly down, breaching below this 27.2 Fibonacci extension level, with the response to that level seemingly being a buyback of orders and a move now to the upside. That said, now we've pushed back into this area of liquidity, which has been used as support before. We know that support can often then be turned into resistance, so the chances still are there of US indices now rolling once again off to the downside to continue their downtrend, but it will be definitely interesting to see how that shapes up. Obviously, we have some interesting patterns shaping up on the RSI as well, so definitely keep your eyes on US indices going into this week, where we have the Fed's interest rate decision as well as US NFP data coming out, so some very significant data releases this week. But next to talk about, of course, is the dollar, which has seemingly fell coming into this week so far, which was sitting around this strong area of resistance where previous pushes to the upside had been reached, and it has seemingly rolled off that area and is now nearing the 61.8% Fibonacci area that we have highlighted as a strong area of liquidity, as well as this being the other side now of this bearish trend line that we had highlighted, that making this potential buy area even more highly probable for a bullish reaction. So definitely keep your eyes on this area as the dollar nears it. We have broken already below the 38.2% Fibonacci area as well as the 50%, so definitely keep your eyes on that as the dollar seemingly sets itself into a range following this strong bullish movements since July of this year, has moved all the way up to here and is now seemingly ranging around this area, seemingly still trying to find which way it wants to move, whether that be bearish or bullish, but definitely the Fed's interest rate decision this week and the rhetoric following that in the FOMC meeting will be extremely important to understanding where the dollar may go from here. Next to talk about, though, on the same topic of the dollar is Euro USD, which has pushed higher and broken above this strong area of resistance that we've highlighted. An area of liquidity, of course, has broken higher than that. So once again, following similar patterns to the dollar, we are nearing the 61.8% Fibonacci area. Arguably, we've already touched it because we've come into near we've come close to it. And so, we've triggered that sell-off already, quite possibly. So definitely keep your eyes on Euro USD as we go into this week, and especially as we go into today, when we have the Eurozone inflation rate coming out today, as well as, Italian and French inflation rate. So really important data for the Euro today. This will be highly pushing whether the Euro will move to the upside or downside, as, the importance of that inflation data is key in understanding how the ECB might shape its monetary policy. That said, today we did have German inflation coming in below expectations, so doing better than expected, as well as the economy doing better than expected. So, that's something to note, of course. Next to talk about, though, is pound yen, where there's not much to talk about apart from the fact that we have pushed into this area of liquidity that we highlighted going into this week, and we failed to break lower on it. We did wick below it, but we failed to push below that area. So definitely keep your eyes on that as things do shape up. Next to talk about though is USD JPY, which has spiked into this area of supporting liquidity. This area has been highlighted for some time. We've had some significant moves and volatility into that area following dollar and yen news, and so definitely it'll be interesting to see how price may now react to this area, as bullish momentum is likely from such a strong area of liquidity where we've seen liquidity be gained from before with this high volatility spike. So definitely keep your eyes on that. Bitcoin is also something to note at the moment, with Bitcoin once again remaining within this range following Bitcoin's spike in price following increased Bitcoin ETF expectations, I guess you would say, speculations that a Bitcoin ETF will be approved. So definitely keep your eyes on that as we stay within this range, but we do seem to form a bullish movement to the upside, so definitely keep your eyes on that. Lastly, to talk about though on the charts, of course, is gold. With gold breaking above this area of liquidity, this prior high, and breaching above the $2,000 mark, obviously, and this came following increased escalations within Israel, where Israel did finally decide to invade into the Gaza Strip. This has driven gold's price above that 2,000 mark, but obviously interest rate decisions this week, as well as NFP data and Eurozone inflation data this week will be heavily messing with gold as well, and we are on this bullish trajectory on the short term as well as on the more long-term view as well. So definitely keep your eyes on that as things do shape up on gold. But that's all to talk about the charts. Lastly, to talk about though, of course, is the economic calendar, where we have very significant data coming out today with lots to note, of course. So firstly, we do have Chinese manufacturing data. We know the Chinese is struggling a lot at the moment with domestic demand as well as foreign demand, which is influencing their manufacturing scene. So definitely keep your eyes on that data release. As well as that, we have Bank of Japan interest rate decision, as well as Japanese consumer confidence. Now, Japanese interest rates have stayed the same for quite some time now. But with changing inflation rates, actually, we do risk, a change, but we are expecting that, minus 0.1% interest rate decision to remain the same. So as that, we have German retail sales and Swiss retail sales data. We know retail sales plays greatly into the way that we perceive, consumer, demands within the economy, which obviously influences inflation. So definitely keep your eyes on that. As well as that, we have French and Italian inflation rates. So some very important inflation rate right there, along with, and most importantly arguably, Eurozone inflation rate and GDP growth rate. This is two very significant pieces of data which will be heavily driving the ECB's monetary policy, so definitely know what's going on in relation to that, as it will be heavily pushing Euro USD as well as also gold this week, so definitely know that. As well as that, we have US consumer confidence coming out this week, along with Aussie unemployment data. So we've covered lots in relation to the charts, lots in relation to the articles as well, and we've got lots of data coming up today. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.